What it do, ladies and gentlemen? This is not sponsored by Kool-Aid Jammies, but you know, Kool-Aid Jammies is always great. In today's video, we're going to be learning how to build a trading plan, which will then be like, damn, we just learned that last video. But we're going to learn how to execute it in discipline. I ain't really focus it, and this time I'm going to focus it. And then I'm going to tell you how to build a system. Feel me? So let's get nitty bitty mode. Oh, messing up. And here we go. First things first is building a trading plan, right? This is what you need to build a trading plan. Number one, what markets will you trade? Me personally, I am going to trade gold and NQ. Okay? What time frames will you trade? Right? I mark up charts on the 1 hour and I take trades on the 5 minute and 1 minute. Only time frames I look for. What strategy will you use? I use STC or Slime's Trading Concepts. Feel me? Risk management. This is where the problem lies. A lot of people feel like throwing minis everywhere is going to get the problem solved. But you got to understand just as much as you're going to make is as much as you're going to lose. A lot of people have great confidence in their strategy, but then there's people that don't, and they're not comfortable with risking all kind of crazy money. So here with Slime Trading Concepts, I normally tell people do a solid 1% if on funded, and if on live, anything under 1K is 10%. Anything under 10K, my bad, is 10%. You feel me? Matter of fact, anything under 5K is 10%. When you get in the 5K marks, that's when you want to drop down to 1%. Anything under 5K, 10%. If unfunded, 1%. Because they give you 50K, you could risk 500. They give you 25K, you could risk 200. You feel me? Cool. Trading rules. This is where everybody seemed to falter. Nobody seemed to have defined rules, right? Let's go down the list. 1, 2, hold on, did I press space bar? 1, 2, 3 trades a day, right? That's number one. Let's see, 8, 9, 10, 11, 12. Okay, 4 hours a session max, right? That's the two standard. Mark out market structure. Feel me? Find key levels. All right. Wait for price to come back to a key level. what entry model are. Oh wait, instead of that, figure out in, I can't type, one take guys. Figure out an entry model. Risk 1% on funded and aim for bare minimum 1 to 1. Trading rules, right? So we got how much times we're going to trade this session or this day. We're only going to spend 4 hours on the chart. So within 4 hours, if we don't get our setup, we're not going to trade. We're going to mark out market structure because that's the basis, that's the basics or the foundation of my strategy. We're going to find key levels, i.e. support and resistance. We're going to find them on the 1 hour. We're going to find them on the 15. We're going to find them on the 5 and the 1. You feel me? Matter of fact, let's go ahead and edit this. 15, 5. So we're going to go find our key levels on the 1 hour, 15, 5 minute, right? Then what we're going to do is we're going to wait for price to come to one of these key levels and wait for a reaction. Once we get a reaction, we're going to figure out what entry model we're going to use. By entry models, I mean this. Is this a support and resistance play? So if this is a support and resistance play, we're waiting for the rejection, stop loss underneath the lows. Or if you're selling underneath over the highs. You feel me? Is this a supply and demand play? Some people wait for price to get into supply, they take the trade. Stop loss underneath the supply. They do the same thing with the demand. Some people wait for the candle rejection. If once the candle breaks the previous red candle or the previous green candle, that's what they take. Stop loss under the rejection candle. You feel me? They aim for 1 to 1. If it's a play like that, figure out how you're going to enter. Me, I trade M's and W's. I wait for an M or a W at these areas. I take the neckline break. Or if an M already formed, neckline rejection. You feel me? That's what I mean by entry models. And then the risk is pretty same. Risk 1% on funded. Anything under 5K is 10%. So if you got $1,000, you're not gonna risk 1%, which is $10. You're gonna risk fucking 10%, which is $100. Think about it. All right, you done thought about it. We good. Last but not least, journaling. A lot of people don't like it, but it's the most important thing. Me personally, I use YouTube and social media to journal. That way I can go back and just look. But a lot of people don't have that luxury. I would tell you record your trades, screenshot your trades, but do it after you take profit. That way you can look at the market, look at your previous data and say, this has happened before. So now that I'm seeing this happen now, I know what to do because I've done this before. You feel me? You see how you can piece this shit together? Okay. That's how you build a trading plan, ladies and gentlemen. If you're new to the channel, make sure you like, share, subscribe. If you're old to the channel, make sure you like, share, subscribe. Thank you.